In the era of side hustles and entrepreneurial activity, there are many different ways that people want to start their own businesses. Today, here on #Lawyer, we're going to talk about the critical paths you need to follow in order to do this successfully. Welcome back to #Lawyer, everybody. We got Andrea and I here in studio and ready to talk about something that is very common today. We're seeing it all over the place. Very common. And I will say, you know, we bash social media a lot, either subtly or overtly. You do. I love social media. I bash it a lot because of some of the attitudes and some of the what I call computer screen protections people get to say whatever they want without any kind of consequences.
Yeah, the trolling.
Right, all those things. Mm-hmm. This is one of the things I do love. This is an area I love that social media has helped so much. And that's small business owners, entrepreneurs, people starting up with side hustles, all those kinds of things. I do love what social media has done for them because it's helped them get their word out and help. It's actually created an entire industry.
It has. I actually was listening to a podcast recently on the Skinny Confidential Him and Her. Shout out Lauren and Michael Bostic. You have no idea who I am, but I love your podcast. But they recently interviewed someone and they were discussing how there has been this creation of an entire industry for mid to younger millennials as well as Gen Z that doesn't require a college education and that permits people who are still minors, right, to get in and start creating their own business, their own entrepreneurial ventures at a young age and be in control of their own work life, and allows people who are creative to actually have a really valuable, industry experience within this new digital age of the influencer.
Absolutely.
And so I thought, that is really well put. This is fascinating. I never thought that there was going to be this whole industry created by social media, but there is.
Yeah. Yeah. And we've on this show talked to a lot of people who have made a lot of headway on social media in building the business, whether it's Power Women Blazers is one of our guests. And we part of what we try to do here is give people practical advice about things they should know about. Right.
Yes.
And I think there's a big myth that comes with anybody in any industry about, it takes a whole lot to start your own business. The first steps are not that hard, but it's just making sure you know where you're going.
It's the practical steps. And it's making sure that you're protecting yourself, because there's a lot of things that maybe you and I as lawyers know about.
Right.
But, Jenny Sue down the street is not going to think about this. And why would she? She's never been exposed to, various laws and various health code requirements. For example, one of my girlfriends growing up was really into cooking. And after college, she decided that actually she didn't want to use her English degree. She wanted to be a chef. And so she's like, I'm going to start my own, I'm having a really bad blonde moment. What's
personal chef company or meal prep? Meal prep.
That's what it was. Yeah. I think it was a meal prep situation. And that she also wanted to do catering, meal prep and catering. She didn't, I'm sitting here and I'm like, you have to have certifications from health code compliance and certifications. And then you have to have your name registered and there's all these legal things that you need to think about. And she was just like, I'll just pop up at a farmer's market and, promote myself on Insta. And I was like, there's more to it than that. And I'm concerned because I don't want you to get in trouble. Please let me help you.
Well, and you're much better at making sure that you're following the rules and taking every step by step.
I'm a rule follower.
I'm a little bit more of a gunslinger, kind of fly by the seat of my pants kind of person. So probably somewhere in between maybe is the right answer.
Yeah. So I'm guessing you're a little bit more Wild West. And what am I, Black Widow over here?
That's an intense metaphor, but sure, let's take that.
She's got great hair. I wish I had hair like that.
Well, so one of the things we want to talk about, because we've touched on things like copyright, we've touched on different aspects of running a business as far as how the law impacts it, but we hadn't really talked about foundationally, how do you crank up and start one? What do you need
literally,
to do?
What are the steps?
Right. So one of the first things that we're going to cover right now is about the formation of the actual entity. And this is all Texas-based because we're licensed here in Texas, right? So within that, you've got we'll start with what's called a sole proprietorship, which you don't actually have to be registered to do that.
Just you.
Just you. What's the problem with being a sole proprietor, though, Andrea?
You are open to all sorts of liability.
Right.
So, for example, if my girlfriend who wanted to do catering, she has a sole proprietorship, call it, CNC catering. Someone gets the worst case of food poisoning because someone didn't listen to her instructions and keep a poke salad chilled, and it was left at room temperature, and someone gets violently ill and goes to the hospital and then winds up suing her. Well, she's personally liable. She has no liability protection.
And I think it's important for us to stop and kind of explain that to the listeners. So
what liability protection is?
Right. Well, so like Texas created a system, right, where you can create a separate entity that takes on its own identity legally whenever you sign contracts. So like, what does that do for the person behind the company that actually owns the company?
It shields them from liability. So what it does, depending on the entity, right? So instead of being personally liable, right? So my friend in charge of CNC catering, if it was a sole proprietorship, she has no liability protection. But if she did create, one of these various entities, let's call it an LLC because that's what people are very familiar with, limited liability company, not corporation, limited liability company. My biz org professor was very adamant about that. What it would do then is that it would shield her from that lawsuit. So instead of her being personally responsible for allegedly causing the food poisoning and having to pay for the hospital bills, it would be the LLC who is responsible and would have to pay for the hospital bills, not my friend.
Right. So basically CNC LLC, if it was formed, would be the one that potentially could be exposed to that money judgment or whatever happened if she got sued. And even if, and that's the whole idea, right, is even if CNC gets sued, loses all of its money, then your friend, her personal assets are secured.
Correct.
She doesn't have to worry about the unfortunate person who got sick coming after her own personal assets that are in her name. And we're going to get into that here in a second. But that's the idea of liability protection, right? So outside of a sole proprietorship, you can have other types of entities that are formed here in Texas. A general partnership really doesn't provide any protection there. And that's what technically, and correct me if I'm wrong on this, I believe I recall that if you don't form a legal entity like the ones we're about to talk about, and you're working with someone else on some type of with a company, it's treated just by default as a general partnership.
You're correct.
Which means that it's the same thing as a sole proprietorship as far as protections are concerned.
So so say that my friend got together with her boyfriend and did that. Okay, now they would be a general partnership.
Right.
And so they both would be responsible for the food poisoning, allegedly.
And so now we're going to get into these entities that actually provide some type of protection.
So these are the things you want.
Right. And you do have to pay money for them.
You do.
And usually they're, depending on what it is, you're looking at a couple $100. Usually it's around $300. That's what LLC is, $300 plus tax in Texas.
Way cheaper than California.
And way cheaper than paying for some type of damages or any other types of things.
Food poisoning hospital bill.
Right. Well, even let's look at like a credit card. If you got a company credit card versus a personal credit card, well, even if your company goes belly up, Visa can't come after you personally unless they get some type of a personal guarantee or something like that. And so you're protecting yourself, even from that. So we have a limited partnership, and then we also have a limited liability partnership. So what are the differences there, Andrea?
I hate LLPs.
I know. I was once part of one.
You were? Okay.
Yeah.
Well, I'm going to let you talk about LLPs because I haven't even considered an LLP since I left law school and took the bar exam. Because I'm always thinking LLCs, court, and corps.
Yeah. Well, and those are the most common ones.
And PLLCs.
Basically, just to sum it up, to make it easy, the limited partnerships, they provide a partnership where you've got your typical partner-to-partner kind of interactions, but there's a liability protection there. The reason we created limited liability companies in Texas is they're more flexible. You can bring in more people. It's easier to form them. And that's the one most people hear about, right? That's what everybody says when they come to your office, like, well, I want to form an LLC. That's usually what we hear.
They're cheap, they're effective, they offer excellent liability protection so long as you keep things separate.
Right.
And we'll get into that.
We will. The last general one that everybody knows about is a corporation. That's what you think about when you buy shares into a big corporation. That's usually done for companies that are going to be larger. There's some other reasons you can do those.
Typically tax reasons.
Right. And then one thing I just thought I'd mention, we do have professional designations in Texas.
Which is what I meant by PLLC. So that's a professional limited liability company.
Right. And typically those are used for companies like law firms where you have to have pass-through liability. So like, for example,
what is pass-through liability?
It means that we don't get as many of the protections that are there for companies that are just pure LLCs. And typically it's for legal malpractice. So if my company's a professional corporation, if they sue the corporation, I'm the sole shareholder, they sue me for malpractice and we get a judgment against us, it comes directly to me because laws about lawyers are stupid and they allow those types of pass-throughs. And so it doesn't provide as much protection, but legally we're not allowed to have as much protection. So, great. Good for us.
Yeah. Everyone hates lawyers, right?
Right.
Gosh.
Right. So once you form one of these entities, and we're just going to use an LLC because that's
typically what people are going to form, right? So if, for an example, let's just have a hypothetical running through this whole scenario, right? Let's have Katie of K&C Catering.
Okay, I was going to say, let's stick with the catering one for sure.
We'll do that because there's a lot of great potential liability exposure in catering.
Sure. So Katie, she's going to form K&C Catering LLC. So she decides she's going to do an LLC. What are some of the things that, some of the components and people that are going to have to be listed in this initial certificate of formation? And certificate of formation is what you file with the state. It says, here's my company, and then it lists some information that we're about to run through right here.
Absolutely. So one of the first things that she's going to have to do is list a registered agent. Okay. Why is a registered agent important?
Because if you get sued, that's the person that gets actually served with the papers.
Absolutely. And you have to, by law in Texas, if you're doing business in Texas, which should be.
Katie is in this situation.
Katie is in this situation. She's not some sort of Delaware corporation.
Right.
We'll get into that another time. She is a domestic, meaning Texas limited liability company for K&C Catering. So her registered agent, like you said, is the one who accepts what's called service of process, which is going to be the complaint and what we call in Texas state court the petition.
Basically says, you've been sued and here's why I'm suing you. And I have seen it so many times. It's so important after you form this LLC that you keep that information up to date.
Relevant. Keep it up to date and relevant because y'all, this is one of the things, I actually had this recently happen.
It's happened to me a bunch with, not me, but clients of mine.
It drives me up a wall. Thank goodness I'm paranoid and I keep calling. The clerks probably hate me, but I call and I was like, hey, has service been issued and has service been completed on the registered agent? And just recently, I called and sure enough, 11 days ago, my client's registered agent, whom I don't think he kept updated, had been served and he hadn't bothered to tell me. Probably because he didn't know, because he didn't keep the registered agent updated, which is a problem. And why is that a problem?
Because if someone gets served as your registered agent, they don't tell you, there's a chance you can get a default judgment against you, which means you didn't participate in the lawsuit, and because your agent didn't tell you, you didn't file what's called a formal answer saying I'm denying these charges. The person got to walk through the courthouse, get the judgment against you for however many thousands of dollars.
For however much money they're claiming and can put on evidence of.
And it's so much harder to fight that after it's been issued.
Oh my gosh, it's so difficult. Yeah. It's so difficult to fight that. Like I was in a situation years ago where it was in the logistics industry. This person came to us long after a default judgment had been rendered because their registered agent hadn't been updated. And they came to us saying, can you fix this? And I'm looking at it like, well, let me see what I can do, but there's usually not much. Thankfully, I found a technicality. There was a defect in service. So I've managed to, shove our way through a loophole.
Yeah.
And we were successful, thankfully. But if that, defect in service hadn't been there, there was not going to have been much that I could have done.
I'll tell you more of a nightmare story about that. Had a client who now we are the registered agent for, which I try to do with all of our clients because then they serve the law firm. It's like, hey, good. We saved you a step, So default judgment situation happened. They got served, didn't know they got served. Months go by, company gets a default judgment against them. Well, if you get a judgment against somebody in Texas, there are certain situations where you can garnish a bank account, which means you go to their bank and say, they owe us this money. They have this much money in their checking account. I'm oversimplifying, but
take it.
Freeze that money, give it to me. Well, I didn't get the phone call from our client until months later when the bank sends them a notice of garnishment and I'm not going to say how much, their lot of money in their checking account was frozen. And that's the money they're using to pay their employees, to pay their tax, to pay their day-to-day expenses, month-to-month expenses, rent, and all of a sudden it's frozen. And it's like if you had just had the registered agent updated, we could have contested. Because the thing was, the underlying case, was a load of crap. It was the case. it was a garbage case that we could have fought and at least, if not won, knocked the number down a lot. Mm-hmm. We never got the chance to because they didn't keep the registered agent updated.
So y'all, at the end of the day, keep the registered agent updated.
Have your lawyer be the registered agent. That's the easiest thing in the world.
Or
to be
if you want to get real fancy, there are literally corporations like, what is it, like B&T Corp or something?
Well, there's a company called CTS Corp or CTC.
CTS Corp. Yeah. Oh my gosh. Like every mid to large corporation that I look up has CTS Corp named as a registered agent. And their whole job is to be here in the state of Texas to receive service and then to immediately let the appropriate person at the company know that there has been service perfected.
Yeah. So registered agent, take care of that.
Do it.
So let's go deeper into an LLC. So in an LLC, you have different types of people that can be designated. You have what are called members and what are called managers. And what are those?
So these are the different people that are going to be essentially operating, right? The LLC. And so you can have a member-run LLC or you can have a manager-run LLC. Members make sense. These are people that actually own like percentages of the LLC. Typically, this will be determined, the percentage will be determined by the amount of capital that you put into the LLC, but not always. It depends on your company agreement, which we'll talk about in a little bit. And then there are managers, right? If you want to do a manager-run LLC, these typically are members, right?
They not necessarily.
Not necessarily.
They can be.
Okay. In my experience, they've usually been
usually are at
members
the beginning
as well.
stages. Yes,
when they're just beginning, but not always.
And kind of the best way to think about that is the way I always explain it. At least is members are the owners, the managers are the actual employees that run the firm. The company, the LLC, and we'll get into it later. But you can have ways to remove managers. The Business Organizations Code, which is the body of laws in Texas that governs how all this stuff works.
We call it TBOC for short.
There's usually ways, there's methods to remove managers. Can't really have your ownership removed unless it just on a standard situation under the TBOC, you typically can't have your ownership removed. So there's just a different standard there between those two. So I do want to get into now this topic of piercing the corporate veil.
Yes, let's do that because we're going to bring that back around to my comment earlier about you want to keep things separate.
And there's a lot of myths and there's been a lot of changes, especially here in Texas recently.
Yes, especially in Texas.
So typically, historically, let's talk about what you were just saying. We mentioned, we have liability protection by forming this entity.
Sure.
And then people throw around the term piercing the corporate veil a lot, especially in my office. And it's kind of, this thing you keep on saying, I do not think it means what you think it means.
Okay, Princess Bread.
Thank you. You good memory.
Thanks.
So there are times when someone can actually pierce through that liability protection and go after the individuals who are behind that shield.
Let's give a visual here. Yeah. So Katie for K&C Catering creates K&C Catering LLC. And so essentially there is basically, a veil in between Katie and her LLC. So in order to get to, say there's a judgment rendered against K&C Catering LLC, they're not going to be able to get for food poisoning,
for
right?
$100,000, let's say.
$100,000 because of bad poke. And so they're not going to be able to get to Katie unless they can do what's called piercing the corporate veil, right? So just have this visual. Katie's hiding behind the veil of her LLC and someone sticks a knife through, like a kitchen knife. They're like, aha, we've pierced the corporate veil and we can get to you because we've met these 5 bazillion requirements that you have to meet to pierce the corporate veil or get to the individual behind the LLC.
And let's talk, the reason people would want to do that, the reason they would want to pierce the veil is, let's say K&C LLC, it doesn't have very many assets. It has some inventory. It doesn't have enough money to pay that judgment.
Say it has maybe $15,000 worth of cooking equipment, knives, cutting boards, things, some air fryers, I don't know, whatever you need for catering.
That's going to leave that person who was injured short $85,000. And so they want to say, okay, well, does Katie have a vacation home? Does Katie have X, Y, and Z? Does she have some assets she owns personally that we can grab a hold of? And if she does, okay, we need to try to figure out if we can meet some of these factors to get through that LLC
Katie
veil.
has inherited a, Manolo Blahnik collection from her grandma. Okay, those are expensive shoes. And so they're like, well, we want to go after Katie's Manolo Blahniks and sell them on the real to fulfill the rest of our judgment.
Yeah. And they can only do that if they are able to pierce the corporate veil. Now, historically, you were talking about maintaining separateness because of that. That's a factor in this whole thing. Can you explain that to our listeners?
Absolutely. So there's a lot of factors when you're trying to pierce the corporate veil. One of the biggest factors is maintaining the, how do I say this without like getting into a bunch of legalese, right? Basically maintaining the integrity of the LLC versus the person. So you want to make sure that the corporate fiction of the LLC is maintained. So the way that you do that is that the LLC has its own checking account. It has its own bank account. You don't reach in and you don't use the LLC's bank account as a piggy bank for yourself. Everything that goes in and out of the LLC's bank account is the LLC's property. You don't touch it. It is not yours. It belongs to the LLC. Now, if Katie, right, starts saying, oh, well, I want to fund a Florida vacation, so I'm short my checking account, but cash just came into KNC. I don't want to wait for my distribution from KNC. I'm just going to go ahead and take money out of KNC's checking account to pay for my Florida vacation. Okay, that's a problem because that's not her money. Even if she puts it back, if she makes a habit of doing that, of using the LLC's bank account to fund her lifestyle, even if she pays it back, now she's starting to use that as her own piggy bank. And now you're not maintaining separateness between the individual and the LLC.
Yeah.
So now that legal fiction is starting to dwindle.
Right.
There's not space between them anymore.
And I think that a lot of people, there's some myths here kind of on multiple levels. One is some people think, well, okay, if we can prove that she did that once or twice, then we've got her and we're able to pierce.
That's not sufficient. You have to, this needs to be an ongoing practice.
Yeah. And I think there's also a thought that, okay, well, if this person is a single, it's just Katie, she's the only owner of the LLC, that'd be pretty easy to go ahead and knock that down. It's not, especially if Katie has done a very good job, because say that she heard this podcast and, was listening to Austin or me, and she knows, oh, I need to make sure that only LLC money comes in and out of the LLC's bank account, and I don't touch it if it's not for business purposes. And she has proper accounting. She's good with QuickBooks, or she hires an accountant. That's one thing. Outsource, y'all. If you're not good with accounting, you should outsource that. That's one thing you don't want to spend or skimp on, if you will. Right.
Spend money on it. And so, carry on.
Yeah. So the interesting thing is that in 2006, some of the landscape in Texas changed and made it a lot more difficult to actually pierce the corporate veil. Came out with a new law. It's Texas Business Organization Code 21.223. And there's been case law on it, and I won't go into the specific cases. But basically what ended up happening is that the state legislature and the courts have upheld that the veil of an LLC may be pierced with respect to the entity's contractual liability, so liability for a contract that you drafted with somebody, only upon proof that a member or manager used the LLC to perpetuate actual fraud for that direct personal benefit. So the mere allegations of alter ego, which is kind of what you're talking about, using the company as both your personal and your own, that's not enough anymore. Now you've got to show, okay, they actually perpetuated a fraud on the person they contracted with, some other company, and then you can go into some of those alter ego theories and some of the ideas of commingling funds and all that kind of stuff. It's interesting to me because I didn't realize this until I started digging into it, that line had been drawn that you've got to actually show actual fraud actually occurred.
It's pretty wild. And fraud, like we said before, I think it was in our election podcast, fraud is a very high burden to prove. Because you have to prove actual intent.
Yes.
Intent to defraud someone.
Smoking gun of actual intent is hard because no one's ever going to say, I intended to.
Yeah, no one's ever going to say that. So you have to have buckets and buckets worth of circumstantial evidence, very good circumstantial evidence.
Yeah.
And it's difficult to prove. So, let's give a hypothetical, right? So, Katie, what sort of situation where would we be in that would trigger this provision, right?
So, and I was thinking about this before the show. I think, let's say Katie's got KNC LLC. Let's say she wanted to purchase a piece of equipment from Sears. And so she doesn't have the credit to do it. And we're going to make a lot of assumptions here, so just follow me with this. But let's say she forms a second LLC that is just KT LLC for the sole purpose of purchasing this equipment from Sears. Let's say she forms that entity, she purchases the equipment from Sears, takes the equipment, never makes a payment, absconds with the new kitchen appliance, and then Sears tries to sue her to come back for it. If she was setting up that whole entity by itself for the sole purpose of acting like she was going to pay for that, and then she knew she never was going to.
Because she never had the funds
Never had the funds to do it, never intended to pay for it, intended this whole time to kind of do a shell game, ball bait and switch. Then that's an example, and it's an extreme example, but that's an example. The whole reason she set up that LLC was to perpetuate a fraud on Sears. So piercing the corporate veil there makes sense and says, all right, let's go after Katie's shoe collection.
Vanilla Blonde collection.
You. Yeah. And therefore we can use that to pay for the rest of this appliance that she didn't pay for.
And I think that's actually a very clear example of
right. Because the idea, there's the sole purpose of what she did was to set that up. Now, what I've seen a lot, and Ronnie and myself in my office have dealt with this a lot, is actions that occur under what's called the Texas Fraudulent Transfer Act.
Yes.
And I won't delve into all of it, but basically the idea is if you take assets, you know that you owe money to somebody, or you know you're about to be sued, or you just were sued, and you start shoveling these things over. People love to talk about, what if I just move this and put this in a trust and do this?
Let me just put it in a trust. No, it doesn't work like that.
Especially not if you know there's an impending debt that you're going to owe. And so these two things can kind of go together because say you form a separate LLC, you've just been sued, and we're going to take all of our vacation homes and all of our major assets and move them over to this new LLC. Well, first off, it's a fraudulent transfer.
Which is bad. So under TUFTA, your Texas Uniform Fraudulent Transfer Act, you're in trouble.
You're in trouble. Second, the whole reason you formed this LLC was to perpetuate a fraud because you're hiding assets. And so the law says that if the person you owe money to gets a judgment against that initial LLC, then they can claw back all the assets that were then transferred over.
So all those vacation homes are still going to be up for grabs.
Right. And, really, you probably could still get there under the piercing statute that we just talked about, but Texas just bolstered that by saying fraudulent transfer, you can't do that. You can't move it back and forth. I've actually seen that upheld in a divorce situation.
In a divorce situation?
Divorce, it was because it was such an inequitable distribution of the assets that we knew husband was going to come down with a judgment against him, a very large judgment. The fact that he moved all the assets in the divorce, in the decree, to his wife's possession, the court upheld that it was a fraudulent transfer, clawed it back.
Wow. That's interesting.
Now, we didn't appeal it because we ended up just settling the case, but the court was going to uphold that.
That's wild. That is wild.
That's what I thought too, because I was thinking it's a divorce, but yeah, so that's interesting. So
Texas is a business-friendly state.
It is.
Business first, y'all.
It is. One last thing I want to talk about with formation, tax versus state formation, how the IRS treats entities is far different from how the state of Texas treats entities.
Yes,
so, for example, the IRS doesn't have a checkbox for LLC designation. So that's something you need to talk to an accountant about, because they'll be able to talk to you about, okay, what does it actually mean to be an S Corp?
Yeah.
Everybody wants to throw that term around.
They want an S Corp versus C Corp. It gets very confusing. You talk to an accountant, talk to a tax lawyer.
Because, basically what I wanted to tell everybody here is you can't form an S Corp under Texas state law. That's an IRS designation.
It's a federal issue.
Yeah, you form an entity and then you make a designation based on your taxes and your CPA's advice to figure out that S Corp idea.
Yeah, and then also too, like if you are a single member LLC, right? So if K&C Catering is owned 100% by Katie as its sole member, then that gets into a whole issue of like, is it, a disregarded entity for tax purposes at the federal level? And it gets complicated. Talk to a tax attorney, get an accountant.
Yeah. Speaking of talking to professionals, one of the things that you need to talk to a lawyer about is what's called an operating agreement or a company agreement.
Yes, this is so important.
Now, what is that?
So the operating agreement is essentially going to be the handbook on what you're going to do, how you're going to run your business, and it provides the instructions for what to do if certain disagreements pop up.
Yep. And it talks about, so we're going back to the member manager idea. Okay. How are members' percentages calculated?
Absolutely.
How can you bring in a new member? How, if a member wants to sell his or her share, how does that go about?
If a member dies, what happens to his or her shares?
Managers. How do you elect managers who get to run the company? How do you remove managers? How do you add managers? And there's all sorts of things. And that's why like LegalZoom, bad idea for this kind of template, because, or even using a template from a lawyer who doesn't understand these things.
Yeah, that's
because
true.
You can end up in a situation, and I've seen it. They've come into my office before where you've got deadlocks because they didn't have a good tie-breaking procedure put in there.
Which is extremely important. Yeah. And also, y'all, for the most part, owning a company 50-50 is not a good idea.
It's not a good idea, but if it is, so say that you've got two people, they own, let's say that Katie brings on a business partner.
Yeah. Say she brings on her boyfriend, which is terrible, and I would never suggest doing that.
We're going to get into premarital agreements and divorce law here in a second.
I know, right?
So what's her boyfriend's name?
Jason.
Okay, so Katie and Jason decide Jason's going to join the LLC, and they're smart. They go and they say, "Look, we're going to put together an operating agreement."
They come to Austin. No, they go to Spencer. Spencer drafts these sort of operating agreements.
So they go
to
Spencer, and then Spencer's going to say, "Hey, look, you guys want to own a 50-50? Fine. You need to have a procedure for what happens if the two of you disagree about a decision that needs to be voted on, because 1-to-1 you can't split." You know, so you need to have some advice about how do you get a tie-breaking vote in there? How do you figure out how, because what happens is you get companies, I've seen companies of 4 before, where they're deadlocked and their operating agreement doesn't provide for how to get out of that deadlock. There's no 5th tie-breaking vote or anything like that. And they just sit there. Company comes to a halt, and the extreme measure of that is the only way to break that tie break, the only way to break that deadlock if you don't have a tie-breaking vote is
dissolve the company.
Yeah. And usually if the parties won't agree on certain things, then some of them may not want to dissolve the company. You got to file for the court to come in and take a hold of it and dissolve the company and go through.
And now you have this nasty, nasty business divorce. It's going to cost loads of money.
And you can avoid all those things if you go get some advice. And one of the biggest things I think that's important that helps people navigate these types of things when they're starting a new business is having the right operating agreement will make it easier if you want to bring on investors later.
And that's really important too, because one of the things that I'm hearing a lot now in the podcasting space for entrepreneurial podcasts that are intended for people who are interested in creating entrepreneurial ventures is how to do VC, right? So how to raise money through venture capital.
Right.
And so that's great if you want to do that. There's a whole set of issues there. But if you don't have, laid out very specifically how to bring in capital and how to bring in new assets in your operating agreement, you're setting yourself up for a world of hurt.
Yeah.
And I mean, will VC even take you seriously if you don't have these provisions in your operating agreement?
Right. Well, they won't. And you can fix that later. There's times where you can go and you can revamp, but it's going to be more expensive to do that, just like anything else, to revamp it and do that later when you could just start from scratch and make it happen from there. Because part of the problem is if you're going to revamp your company agreement, your operating agreement, you've got to change it based on the rules that are already in place with your current agreement, because all the members and managers have agreed.
Because there's this whole procedure too. Like if you want to amend your operating agreement, there's this whole voting procedure and notice procedure with all of the members involved, and it's a pain. Right. I've done it before. It's a pain.
It is. And so to fix it, you've got to go through that procedure, which costs money because you got the lawyers involved, and then you got to. And so it's better to do it up front.
Just do it right the first time.
And that's what I would also. This is just a little piece of advice for people who are looking to start a company. Factor in. Go get legal budget.
Yeah.
Figure out what it's going to cost to pay the lawyers to do all these things. Factor it into your startup costs. It's not a fun thing to factor into.
No, it's not. Everyone wants to spend money on the marketing. They want to spend it on, a big blowout party. They want to spend it on their website, their Instagram marketing, their branding. Everyone loves branding. Look, paying for lawyers isn't sexy.
Right.
But it's necessary.
Yeah. Yeah. And there's a lot of lawyers that specialize in the startup space.
Yes.
They take creative ways that they can figure out how to budget, how much money you need to spend and how you need to allocate your funds and all that kind of thing. And it's definitely worth it, because you could spend double later, or you could spend quadruple by getting sued by somebody and not doing it the correct way.
There you go.
I think the last thing that I think is important to leave people with is we've talked about, okay, this is how you form your foundation to protect yourself and do all those things. You also need to align yourself with specific resources for your company.
Absolutely.
And so we mentioned, obviously we've talked about law this whole time, but you mentioned earlier about, CPA. Well, you mentioned bookkeeping earlier.
I did, yes.
And there's a lot of people can use QuickBooks. It's set up nicely. I think there's definitely, depending on what kind of volume of revenue you're doing, how complicated your
and especially if you're a product-based company, right? So if you're a product-based company and you're selling lip masks or something like that, it's important for you to be able to track the product, especially if you're selling large quantities of it. This is probably going to look different if you are an influencer and you don't have your own merch or your own product and you're just promoting different brands and using your face to promote.
Right.
Okay. Different situation. Do you need a bookkeeper? Sure. Probably not as badly as someone who actually sells real product.
Yeah. And going back full circle to what we talked about earlier with keeping everything separate, bookkeepers can help you do that, help you maintain.
They're critical.
separateness.
For doing that,
Yeah,
I think,
absolutely.
personally.
Absolutely. And I think another, just to plug one of our guests that we've had before, having a tenant rep, someone who can represent you if you're looking to lease space, so they can help negotiate that. Kyle Jacobs that we had on here from Rubicon. Those are the types of important people. And every industry is going to be different. You're going to have other things you need, but those are some of the foundational people you need.
Absolutely.
To walk you through all these types of things.
Yep. Better to have them at the start than have to go back and say, I have a total mess, please fix it.
Yeah, and on top of that, I didn't think about this, but you saying that made me think of it. These people also deal with other people who have started up companies.
Absolutely. So they have experience, and you can pick their brain, and you can get their perspective, because maybe you really want to do X, and they can say, well, it's your company, you can do X, but in my experience, I've seen X go awry. What about doing Y?
Right. Just another perspective from someone who's got a little bit more experience dealing with these types of issues that you're going to run into as you start growing your company.
Well, ladies and gentlemen, we hope you enjoyed this insight and kind of a cheat guide to your entrepreneurial ventures.
Well, and I'm always going to encourage anybody, pursue your side hustle.
Absolutely,
pursue your entrepreneurial activity. Try it out. Worst thing that's going to happen is it's not going to work out, and move on and go try something else.
Yeah, bigger and better things.
Stay tuned for Closing Arguments. We've got an update on the opioid epidemic and some problems that Big Pharma is facing in lawsuits out in California. Guys, thanks for listening. Closing Arguments are coming up, but make sure before you go rate, review, and subscribe to our podcast anywhere that you listen to your podcast. Check us out on YouTube, and you can check us out on Instagram and talk to us. Tell us what you want to hear about. You can search us at #Lawyered, spelled out. You can talk to Andrea at andrea.s.turner, and you can talk to me at The Dallas Lawyer. See y'all again soon. Several large pharma companies' opioid trial commenced on April 19th in California. They're facing up to $50 billion in a judgment for their role in the opioid epidemic. This lawsuit was filed by the counties of Santa Clara, Los Angeles, Orange County, and along with the city of Oakland, alleging that Big Pharma engaged in deceptively marketing painkillers in ways that downplayed their addictive risks. The municipalities are seeking damages to try and solve these problems caused by these actions and to penalize these companies. This is one of thousands of similar cases across the country addressing this opioid epidemic. It's been going on for years now, and it will be interesting to see what pharma companies survive and which fold up as a result.